Natural gas has fallen nearly 24% over the last 2 months. Joining us now to discuss and share his outlook on the energy sector is Bill Perkins. He's the CEO and head trader at Skylar Capital Management. And apparently he is on a boat. I'm getting Lonely Island vibes from you. Yeah, that's nice. That's a good way to start the year. So last year, Bill, you were short natural gas and cleaned up because supplies were strong. This year, you're saying wait and see?
Yes, definitely wait and see. The market has dropped significantly. We are now burning as much natural gas through power plants and not burning coal in order to balance the market. Producers may be rethinking their growth, and it's winter, so it's going to get cold. There will be some cold shots, and we can always have a rally at any moment on any cold shot.
So there are a lower number of rigs and fracking crews out there, but production is still flat or growing.
Yeah, never doubt the American driller or American ingenuity. They are finding ways to get more and more efficient, doing more with less. They're now not fracking. They're not double fracking. They're trimule fracking. That's a new word that I learned this year. And the efficiency gains keep coming. And so it's a little bit difficult to match rig count and frac crews to supply. But the market is, figuring out that, hey, we have a resilient producer and we don't know where the pain point is. And the price of production keeps getting lower and lower.
And the light in your shot keeps changing because you're on a boat. Meanwhile, zooming out, we've got a war in the Middle East, supply complications in the Red Sea. Why isn't that messing with prices?
Well, it definitely affects prices in Europe, and it tangentially affects the prices in the U.S. We may have to run our exports a little bit higher, utilizing our LNG export facilities, and that might be a boost to demand. And it also, if we ever needed to stop exporting, it changes the price point in which the market has to go. And so the market has to solve for that and balance the price to take into account that risk.
It seems like a really dangerous year for traders because on one side you've got, economies slowing down in a number of places, so that usually means that demand is lower and energy prices might go down. But then on the other side, you've got all of this geopolitical uncertainty and something could blow up at any minute and send prices higher, no?
Yeah, you definitely have geopolitical uncertainty, what the producer is going to do, whether the renewables will come in at the rate that we think they're going to come in, and last year we had a LNG facility blow up here in the United States of America. Nobody expected that, or the year prior. So, you have a lot of moving parts. And right now we're in the middle of winter. It's been mild, but it can get very, very cold. And, I've been hurt pretty badly in the past from some serious cold shots or polar vortex. And the winter's not over.